All right, welcome back for the episode of Carnivore Trades. Today is Friday, November 3rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis and our live day trading room. Anyways, let's get into it today. So markets here holding up really well. So spiders are up 1.1%, triple Qs are up 1.25. I'm doing this video on the earlier side, obviously. It's about a little after 1 p.m. And the market is asleep. So I don't expect too much fireworks before the bell. If we do fade a little bit, it's probably going to just be to 43.50. So there's quite a bit of 0DT gamma interest there. But if they really goose this thing, there's a lot at 4,400 too. That would be, I'd be a little surprised if we go that high, at least today. However, I do think that is kind of the near-term target for this market. That doesn't mean we're going to gap up there and go again Monday. We've already had a, let's see, 4,100. Yeah, we've already had a 270 point move in 5 days. Take a look at this weekly candle. That is absurd. Let me just get rid of these lines. Like, that is absurd. So huge move, huge squeeze. I already erased the trend line I gave you yesterday. I said that would be resistance, and that wasn't it. There we go. And we just gapped above it. So market is very strong. I mean, this was the extent of the pullback that we got. I mean, this was like 15 S&P points. And we're right into the 50 moving average too. We blew through that. Right, so that is, it's telling you that that's strong. That should have been resistance. We should have had to at least pull back there. Not necessarily to say that we had to, sell hard, but you should at least stall out there. And we have not done that. We're actually inching up here into the afternoon. So markets here are very strong. And next level I do think is right around that 4,400 handle. It's going to kind of coincide with this pivot here, and you got this big sell bar. So that's and of course the 100 period moving average. So that's the next real level. I believe there's another trend line we could take from the most recent high. If we extend that out and just kind of put it through both of those bars, you're going to see it goes right into that area as well. So I would assume that's kind of the near-term target. Maybe we have to stall Monday, Tuesday, then we kind of float up Wednesday, something of that nature. That certainly could happen. I mean, the markets are ridiculously overbought here. In the short term, take a look at just the hourly RSI. I mean, this morning it was at 88, above 88. Look at the 15-minute, it was at 87 or 88. Yeah, this morning too. So very, very, very stretched here in the near term. So it doesn't mean we're gonna have to go up there in a straight line, but big move off the lows. Again, I would have liked it if we got that 40-50 handle. So never really got there. But markets are holding up really well. I did tell you, I think the lows are probably in, really when we closed above this red bar. And then, of course, the gap and go yesterday, and a big move here today. So markets are acting very well, and that's going to be our near-term target here. After that, we'll see. We'll probably be getting closer into OPEX week, so sometimes you can get pullbacks in that area. But I think it'll probably be a pullback for buying. Where would your support be? Well, 4250 is going to be an obvious area. You've got the whole round number of 4300, 4250, and then of course the gap. So we'll have to see how the market reacts if and when we get there. But right now, big squeeze up on the tape, and bulls are back in control. The one thing I will say it's likely bulls are back in control. Technically, you don't have a higher high yet, and you don't even have a higher low to go off of. So technically speaking, the bulls are not in control until they prove that. But I mean, I think with the size of this move, you have to give them the benefit of the doubt there. So we're just going to call it that for now. Triple Qs here also coming into that downsloping trend line. So that may pierce a little bit here, 370 whole round number. We already are into the 100 period moving average. So again, kind of similar here. We're at 367, 370s where that trend line is. Maybe it'd be a little bit higher for the Qs, so the Qs might peak ahead of that trend line while the spiders are just getting to 4,400, or maybe the Qs stall out a little bit. That's certainly a possibility. But either way, that's the next resistance level for the triple Qs. And then, of course, you've got this big air pocket right here at 357. And you might even backtest 354, 354.50. which is where that pivot low was, and the breakdown that we got back above. So those are the levels I'm watching there. On the Qs, Russell 2000, where did it go today? Right up into this trend line. So I talked about this yesterday. I said we'd likely go back up and back test that area. I didn't think we would do it today. Look at this. This is ridiculous. Look at these gaps here on the Russell. Not the healthiest move, but you got to respect it. Let's look at the RTY because that trades continuously. Yeah, look at that. Look at that surge there on the RTY futures. But again, coming into this trend line, 50 MA there. So, maybe we could inch a little bit higher, but we should need to pull back a little bit here. I mean, it's unbelievable. It's up about 8-9% here in 3 days on the IWM. So big surge, a 618 would take you down to 167. That's pretty incredible there. But big move there. Across the board, everything's squeezing. Even the junk names are squeezing today. Dow here making a higher high. So the Dow has changed trend there, or at least put in the higher high necessary to, if you pull back and get the higher low, then you can, reclaim trend essentially. Again, still very extended, very overbought. But again, when you gap above these moving averages, it's a sign of strength. So Dow here holding up very strong, holding up very well. Could go to the 100 period moving average around 343 in the short term, and then probably do some backing and filling there. But again, market's really strong across the board. Not really much else to say. Semiconductors here up 2.3, right into the 100. We talked about this trend line yesterday. That's where it wants to go. Notice how all these lines, these downsloping trend lines, all seem to line up with one another. It's probably because it means something. IGV. Again, same kind of deal. So you could even make a case, we could take this from the high and we could go here, we could just call this a slight outlier, and you could make a case that, short term you're going to this line. But either way, back inside the wedge, we're back above the moving averages, trend is back up in cloud software, and looking pretty good on the weekly too. So IGV holding up really well. Transports, again, that 13.5 area held, so right into the 200 on the weekly, and you got basically, for all intents and purposes, an engulfing reversal. It would have technically been one had we gapped down, but either way, we're closing above last week's high, and transports needed to do that, finally reclaiming the 20 moving average. This will be a little bit of short-term resistance here with this pivot. And again, just like everything else, we put in these unhealthy gaps. We're probably going to need to come in and fill them at some point. But transport's holding up, and then the big area is right here. You got the 50 intersecting the 200 right around 14,750, 14,8. Then you got this sell bar, breakdown bar right in that area. So that's going to be your big level to watch on the transports. Perhaps maybe they come back down, hit this trend line, and then put in the higher low. Could get up there. So watch that pattern for the DJT. All right, let's get over here to interest rates. So we'll start off with the 2-year here, and let me get my chart set up. So the 2-year yield is backing off. So again, jobs data this morning, we had a miss of about 30,000. So I think it was 180 expected. We had 150. That's a pretty big miss, but it's not big enough to really scare the market and say that, okay, we're right. Because now here's the next dynamic. The next dynamic is, are we losing jobs too quickly? Because if we start losing jobs too quickly, that could point to a hard landing. So if we miss by like 100,000 payrolls, that would be problematic. 30,000, market's like, yeah, that's good. That's Goldilocks. That means inflation's coming down, and unemployment starting to uptick a little bit, which is getting the Fed closer to stopping, which they're stopped, right? We know that. But right now, a little bit of technical damage, right? The 2-year's been making higher lows since July. Well, actually, really since March. And we finally have taken that out on the daily and weekly of the 2-year yield. So take a look there on the weekly. Now, this isn't broken. There's still plenty of room. You could go back to 450. There's plenty of room for a move back up. But right now, short term, bonds catching a bid. Remember, we talked about this. That short trade is so crowded. 5 years cracking this trend line there. So that should have some support right around 4.4. But we did make lower lows. 10-year slicing the 50 MA. I told you guys right at that pivot, we probably have some support. And it is pulling back, or it is getting a bounce off that level. But the big level is 4.35. That's going to be your big support level. And the same thing with the 30-year. Again, 50 MA, maybe it bounces, maybe you put in a bear flag, but I do think this area needs to get tested. Now that, there's going to be a lot of bond bulls coming out of the woodwork the next couple of months. Here's the thing, though. The United States government is issuing debt at an extraordinary rate. Yields are not going. You're going to hear a lot of predictions of 1% again, and I'm not in that camp, never have been. But in the near term, nothing goes down or up in a straight line forever, and you're always going to get counter trend moves. This is where I'm looking for the 30-year yield to go. Anyways, let's cover housing here. So housing, everything having a big day. XHB up 3%. Where did it go? Right to that trend line. So perfect back test of the purple trend line. And, basically you can make a case it kissed the white one too. They kind of converge. I told you guys 78. High of the day is 78.29. So it got in that range. You do have the higher highs there. So that's a positive. Again, like everything else, lots of air pockets. Needs to pull back. Needs to fill those pockets. But it is holding up really well. And we'll give it the upside bias. Look at VNQ. Again, what did I say? Like the only thing that I like about it is that it's so beaten down that, you could get a short squeeze, right? Everything's priced in. But this looks like the Russell 2000 with those gaps, 1, 2, 3. And where did it go? What did I tell you yesterday? Right back to that trend line, and now it's pulling back. So again, these levels tend to work. That's why I give them out. But VNQ hanging in there. We'll see. If it flags, it can go higher. We'll say 81 will be kind of your next area. 80, 81. Again, if we pull back, you've got the gap right there, and then 74, 66, which is that previous pivot low. That's your big psychological point of control, and then of course this gap right here would kind of round trip it. But again, big move for really everything. XLF, so that getting a bid as well, up 1.6. Again, that probably wants this trend line. I think I told you guys 34, so somewhere in that range, not that far away. Maybe 34.25. Again, that level will likely coincide with 4,400 on the SPX, and maybe a little bit higher there on the Qs, but you get the idea. So we'll watch that next week. Again, very extended, very overbought, but holding up very well. KRE, big move again, short squeezing, right? So it's really that simple. So gap and go, we've reclaimed the moving averages. We are pulling back in off the highs just a little bit. Nothing terrible though. You do have a lot of daily and weekly resistance right in this area. But again, technical picture, in 2 days, you just wiped out basically a month and a half of selling, right? So you were down here. This was September 18th. It's November 3rd right now. 1, 2, and you just wiped all that out. So this is what happens when you get squeezes. But KRE in much better shape, KBE in better shape too, below the 200 still. So again, some resistance, but the technical picture has improved, and that's all that matters right now. XBD. So moving up to the 50 MA, slight pullback there. Probably needs to do some stalling out, maybe a pullback, maybe a flag. If it can get through 490, it can go to 500. On to crude here, down 2.5%. So crude continuing lower. Again, jobs number weak. It's going to bring crude in. Slight lower lows there. I'm still neutral on it. I would say neutral to bearish, at least down to this 200 moving average and that trend line. If we take this pivot out at 78, then it's down to 74, 75. And I would get interested in crude at that area. XLE, little inside day. This is on the weaker side, but it had a big bid yesterday. And again, crude is down. So this is really the only sector that's getting hit. But either way, inside day, I'm not touching it. I don't like the pattern. I don't like anything to do with it right now. Same thing with XOP, although XOP is in slightly better shape, as is OIH. Again, these patterns are just too sloppy for me to do anything with right now. CCJ pulling back. This will be interesting. So I talked about this yesterday. Here's your high, 42.17. And I'll just put that in. And we're below that by about 10, 12 cents right now. So if we close above that by the end of the week, technically it's a weekly breakout. If not, I'm not saying that it's like a damning sentence or anything, but it's just definitely a failed breakout. Big move there. And you'd have to prove it next week with a close back above that level. But CCJ acting really well. Told you guys 45, if it does continue to break out, would be your next level. URNM pulling back. Again, I still think these plays are doing weekly consolidation. I don't hate this pattern. I just would like the moving averages to catch up to price on the bigger time frames. But URNM holding up. Nat gas here, that's green on the day. That looks like a consolidation pattern, up move, inside bar. Again, just like everything else, let those moving averages catch up, and then you can get a play into that $4 handle. Dollar index. So dollar pulling back, outside move down, and we have lower lows there. We are slicing through that downsloping trend line. There is some minor support at 105. The bigger levels right around 104.50 and then 104. So really just kind of these 50-cent increments. But dollar pulling back, obviously markets like that. If this starts to break down towards 4, that's going to be more of a catalyst for stocks in the near term. But dollar pulling back in, with bonds, it's been holding up really well the last couple of weeks. But this could turn into a failed pattern if we break this range, which we're starting to do right now. So I was giving it the upside bias as long as this pattern held, but we're starting to break down here. So we need to be careful with the DXY. And again, that's all it is. That's all charting is. It's bullish until proven otherwise. Now it's proving it otherwise. So we go with, what it's saying now. But dollar pulling back, and obviously stocks liking that. Gold here. So that is up $5 on the day. Nothing crazy here. Again, it's just a consolidation pattern. If it continues doing it, it can push towards 2050. I don't see any issues with it. It might need to pull back to 1950, as I've said. Again, if it's very strange though that gold is holding its gains with stocks being up. You could say that just because the bond market. I guess that's always possible. But gold's generally a fear trade, and obviously, if stocks being up as much as they are, there's telling you there's less fear. But anyways, just a little side note there. Silver up 2%. That looks fine. That's just consolidating for a move higher. Platinum looks fine as well. Needs to do more consolidation. And then that can go attack 960, 980. Palladium still needs to go lower. Copper still needs to go lower. Still waiting for 340. Bitcoin here, that's still hanging in there. But it did pull back a little bit today. Again, you guys know my thoughts. Can't chase it up here. Can't do anything with it. If you own it, trail your stop. If it pulls back, you've got a lot of support around 31.5, and then of course a ton at 30,000. But again, it's just still in a range right now, and there is a lot of resistance at 35, and that's why we're getting that stall out there. All right, lastly here, so it's about 130. Yeah, market's drifting just ever so slightly lower here. Seeing a few things pull in. You're seeing the VIX uptick. That's normal with a market that's this overbought. So I wouldn't make anything out of that. But again, market's having a really strong week, strong day to cap off a strong week. But the next level I'm really watching here is 4,400. I do expect that to get hit in the next week or so. And then we'll kind of evaluate things from there. But good move for the bulls, and definitely a big short squeeze juiced up by Yellen, who I'm convinced leaked that information over the weekend. There's just no other way you're going to explain the size of the gap we had Monday ahead of the FOMC and the size of the vol crush we had before an event vol, which was the FOMC as well. But nonetheless, big move for the markets here this week, and we'll see what next week brings. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all next week.